I was a bit concerned that this is Friday, this is Expiration Friday, and I didn't. We have got we had some puts to push forward, and I didn't want people sneaking in before the close of play today, and putting the stock to us. So I had a little look and made sure that we could get a bit of extra cash by pushing them forward, and that's what I've done. But I'll go through them individually. What I've actually done with it. But before we get to that, this is one of the weeks of the month where we expect to see the market fall, and we have seen a bit of a fall. You can see at the top of the screen there, the Dow, the S&P, and the Nasdaq, they're all down. That's on the day, and they're definitely down on the week. We get that anyway before expiration, because the brokers have to deal. If the prices go up, they have got a lot of extra work to do. So they don't like it. So they tend to push the prices down before expiration. But I think there's also some concern about inflation, which has had a slight effect as well. But I'm not too worried about that. I never would, am I? Because basically we don't do losses. And if we look at the panel across under the left there, we have got a reservoir of £160,786, which is basically cash that is waiting to be converted into profits. And that will convert, the vast majority of that will convert, and it will convert in two different ways. So first of all, just on a daily basis, as each of the puts that we are in move towards expiration, a little bit of the profit will switch across, so as the time value in them disappears. And then also, as we reach each of the expirations, and they'll come good on that. Some might get pushed forward, but as we stand, all of that profit is due to come across, and I'll explain why, but it's now between now and January. And I'll explain why it's January. And looking down the trades we've got here, so what we're really looking at today is the trades that have got only 1 day left. They're the ones that we're interested in. And the first of those is BlackBerry, where we bought BlackBerry shares at an average of $8.87 each. And we were able to sell the call, the July call, so that expires tonight, for the $15 call, unbelievably. And we got 96 cents for that. So basically, you got to knock it almost $1 off that 8.87. So $7.93 is it? That's what we are exposed at. So we're quite happy with that, no problem. And come next week, we'll be looking to sell another call on BlackBerry and create yet more income from it. So we are in a situation where we'll just keep collecting rent on that until it's eventually sold at a price that we're happy to sell it at. The next one is CDE, and you're all in my way here. I can't see the prices. There we go. So CDE is currently trading at 774. We own 400 of them, and we paid $9.13 for them. So we're well below that at the moment. However, we also have sold a call. I don't think it's the first one we sold either on it, and we got 65 cents for that. So again, we're knocking down our exposure, and we're perfectly happy to hold on to it while it rises and to collect rent along the way. So what we don't really want is to just hold stocks, buy and hold them. That's not the idea. They have to earn their keep with rent. And the next one, that's an August call, that one. So that's, I don't know why it's not showing how many. Oh yeah, it is 35 days left. So yeah, so we've got CSOD share. We don't actually have, hang on, how can that be? We're showing, oh, that's right. Yeah, we've got 100 of these shares and we've sold an August call on them. And we got a crazy $2.15 for that. That was a good price, did well there. So we scroll on down looking for more of them. HBI, we've had 100 of these put to us. So that's just happened in the last day or two. And so we have paid $20 for them, HBI. Let's have a look, current price, $17.51. So, however, we had income on them of $2.65 anyway, and now we own the stock. It just wasn't worth pushing it forward at that stage. But I have pushed it forward. We had 200 of them. We've had 100 put to us, and I've kicked the other one forward to October. And we got $4, so that's $4.40. Plus, you'll see when we get over to the next page, we've had more money on top of that. SLV, the quantity is 0. Again, that was for a July 27 put, and that's because I've pushed it forward to October. Teva, again, we have a July put, but the 0 quantity, because I've pushed them forward, and I pushed them forward to January. And the reason that I've done January rather than December is that we have a different type of option available in January, the Januaries of each year. They're called a LEAP, which is a long-term equity appreciation position or something that's called. What it effectively means is you get a lot better prices for January than you would December. So I pushed it forward to January rather than December. We'll look at the orders in a minute. And then we've got Vivo. Why have I not pushed a Vivo forward? Let's have a look. So Vivo is trading at $18.16. And we've had $8.30 on it. Okay. I'll try and do this, but it might slow things down too much. So what we've got one contract, Vivo, July. So I'm going to add an option, which is sell to open. It's one contract the same. We'll have to wait for that to fill, which is why I've been getting ahead. Okay, so if I go now to the orders tab, and here we are. So all of these orders, so from CSOD up, are things that we've done today. So HBI, first of all, so what we did, we bought back the July $22 put and paid $4.14 for it. And then we sold the October 22 $4 put and got $4.40 for it. So we've got a little bit of extra money, but we bought ourselves some months so we don't get them put to us at a price that we don't want them to be put to us at. Then we cancel the order for the lid on the July put and placed a new limit order for the lid, this one for October. We've done the same for SLV, which is it's basically silver. So it's an exchange traded fund for silver. So you're buying and selling silver with this one. So we've pushed that forward. We've bought it back for $3.08, and we've sold the October one for $3.50. And again, we got cancel the order, the limit order for the lid, $26.50 lid, which is nice. It's only 50 cents below, and put a new one in for the October lid. So that's in position already. Teva, the same. We bought back the Teva July $12 put for $3.37, and we sold the January one for $3.62. Got rid of the lid put order and replaced it with a new one. So that's what we've done so far. And I can't understand why I haven't done Vivo. But let's just talk about those. So first of all, does everybody think we've done a reasonable thing pushing those forward and getting some more money? And does everyone understand what we've done?
Yes, that sounds good.
Yeah, it's a really good idea.
I didn't know we could do that. So this is the first time I see it done.
Oh yes. There are 6 outcomes to these put trades, and this is one of them where we say, well, we don't want to buy them at that price, and we don't want to have them put to us yet, so we'll push them forward. A few of them this month have been put to us early, which isn't normal. So normally they would expire tonight, and over the weekend, stocks would get put to us, and lids where they're in position would kick in, and then eventually on Monday, when they get the platform right, I would see where we're at. I'll try and do the Vivo one then, which is Meridian Bioscience, so that we can actually see one of these trades get done. It might take a few minutes. So here we are. So the first thing I'm going to do is just look what we've got. So Vivo, July, $30 put. So we've promised to buy these shares at $30. The current price is only $18.13. So we're not happy to have those. And we will do another trick with them. But for my first trick, I'm going to push them back. And so we've already had $8.30. And we want a bit more, please. For getting us out of trouble and not having to take the stock, we think they should be paying us. Seems perfectly reasonable. Okay, while we're waiting for that to fill, what I'll also tell you about, we won't do it at the moment, although we could. In fact, I think we will. What we can also do is say, well, as there is a big amount of money difference between the $30 strike price and the current price of $18.13, if we were to buy some more of these shares at $18.13, then if and when those other shares get put to us at $30, you would add the two together, divide them by 2, and we'd get an average price. So if we bought 100 now at $18, the average price would be 48? It'd be $24. So we would have brought down the average from 30 to 24, which is obviously very much in our favor, particularly as we've had over $8 in premium income from it anyway. However, rather than just do that, we have another little trick. I'm going to take this we'll try October. We're going to try another little trick, which is to say, yeah, that's a good idea. We don't mind buying some of those shares to do a dollar cost average, but we'd like to be paid to do it. So we'll sell another put to buy the shares. So again, did you actually understand what I'm saying there? So we've taken on an obligation to buy these shares and got $8 odd for it, but we'll have to pay $30 for the share. And I'm suggesting that we take on another obligation to buy some more of these shares, but well below the $30 mark, and get paid for that, so that eventually we'll end up with 200 of them, but we'll have paid far less than $30, and we'll have collected a lot of premiums. Here we are. And while we're there, we might as well have a look at those. So what we can do is we can go for the $22.50 with a 20 lid when we come to get some more. So that will be good. But right.
But with these ones, when we push them forward, we have to stick with the same price, do we?
We don't have to stick with the same price, but it's highly unlikely that we would be able to get a positive premium on it. I'm waiting for these prices to fill now, so that we can actually work out what amount of money we're going to look for. Probably won't get 70 cents, but we'll have a look. Right, so we've got some prices in place now. They're not the live prices, but they're prices. So there's some quite big spreads. So at the moment, if we put in what they wanted, we'd be paying $12.60 to buy these shares back, which is too much. And we would then only be getting $11.50 for selling them again. That's no good. So we need to negotiate on it, and I'm going to start the negotiation at 70 cents. I don't think we've got any chance of getting 70 cents, but I'm going to ask for it. So I can see on my other screen that it's been placed. Okay, so now we need to go to orders. And there it is at the top. Let's move my camera out of the way. So it's new, so it's not filled. So we've got this little arrow here. So this may work. So I should click on it. So you click on the up to make it come down. It may only want 5 or 10 cent intervals, so that's what I'm trying to find out. Oh, it's so slow. This is why I did it beforehand. Right, so it has actually replaced it. I'm down. I'm at 68 cents now on here, so it's going to take too long. So when we finish here, I'll come off and I'll do it. So what I'll be doing is just coming down 1 cent at a time until it clicks in, unless and until it gets to a really crazy low price. So if it gets down to 20 or 25 cents, then I'll have a bit of a rethink on it, and we'll find another way of winning on this trade. So I did a radio program today, something called Men's Radio. It was very strange. I was talking about trading and talking about this, and then halfway through it, my local rag and bone man came by with his street cry. So it was like, what's that? I think a lot of it was about men's mental health. So perhaps I said the wrong thing when I said I just got off and kicked the horse, but there was no horse. He's in a truck. Well, it's certainly thinking about it.
It was when you said you take the old boiler out. I think that's the bit that.
All right.
Yeah.
That's definitely getting edited out. Yeah. I did actually say that. Yeah. There we go. Right, I'm going to stop sharing and let that'll just continue on. Okay, so that's where we're at. There's some more money gone in this week as well. I think the market should sort of start turning around again and heading in the right direction next week. It's a good opportunity for us to get some bargains. So I will look at placing that Vivo, selling the put on Vivo, a 20, I think it was $22.50 put, and putting a $20 lid on it, so that we get paid for some dollar cost averaging, and the average price that we eventually agree to buy these Vivo shares at, if we ever do, will be a lot less than $30 on average. Does this actually make sense to anyone?
Yeah.
Yeah, good. Okay, any further questions? No.
Ah, a question about trading or a question beyond the trading you've just
A
done?
question about the universe, if you like, Louise. I know everything.
Do you? Oh, wow.
Oh
Okay.
yeah, I'm never short of an answer.
Right, so what is the answer?
The answer is there's always another question.
Okay, so I'll give you another question then. Are we going to stay with Fridays? Because I had in my diary we were meeting on Tuesday next week, I think. So, and then we switched to Friday. So I just like to know so I can bung them.
No, I've been a bit disrupted, to be honest. I've been all over the place. Right, when the club was sort of trading calls, meeting after expiration date was perfectly okay, no problem. The calls either got called out or they didn't, and we just went and sold some more next week. That's fine. When we're dealing with puts, then there is action to take before they expire on the Friday. So it is definitely better, now that we're dealing with puts, to meet in this week. So this week, the week of expiration. But I don't mind, and I think I don't know if I've got the others on a set day. If you would like to choose Wednesday, Thursday, or Friday, not actually Friday, not Friday, Tuesday, Wednesday, or Thursday, nearly, Jeff, then we can make that the regular date. I know that helps people. Do you have any preference? Does anybody can't make a Tuesday, can't make a Wednesday, or can't make a Thursday?
I can't.
Thursday's not good for me.
Yeah, Thursday's not good for me either.
Thursday is not good for you. I think that's good for other people. Right. So what about the Wednesday?
Wednesday is better for me, if I'm still here.
Okay, so it will be then the third Wednesday of the month.
That's all right.
Okay, because then the third Friday is expiration day, which is the Friday after the third Wednesday. Okay.
Would that be at 7?
Well, again, I don't actually mind. The market closes at 9, so we should meet before that. But I mean,
so I have a commitment at 7 on a Wednesday every week.
Well, if everyone else is okay with 6, we can do 6.
I'm okay with 6.
That's fine.
Yeah.
Right.
Yeah.
Right. It feels like I've been organised. 6 o'clock on the third Wednesday of each month.
But
So what we should do now is put an email out or something to that effect, and I'll go through and get the dates, and I'll put them in my calendar. And then once they're in there, they're actually pretty solid. The moving around gets done when I don't put them in my calendar and rely on memory.
And two important things as a newbie. The answer to everything was 42. We probably all know. Do we all know that? We don't all know that, do we? Yeah, brilliant.
Oh,
okay. Yeah,
The answer is 72.
no, it's not.
No, it's 42.
72 is the number I use most that's got a 2 in it. If you take any rate of interest and divide it by, take 72, divide it by the rate of interest, you find out approximately how long money takes to double. So if you're getting 1%, 72 divided by 1 is 72 years. 1.5% brings it down to about 55 years, and so on. And that's what, ignoring inflation and ignoring tax, we're getting paid these days by the banks.
I don't think Zaphod Beeblebrox cared about that.
No, I don't. I haven't seen them advertise it anyway.
No. Sorry, I've forgotten what my real question was. Is this normal? We could talk about Hitchhiker's Guide if you want, but is this normal?
Is what normal?
Is because my first time on, I'm looking at something I'm not familiar with.
Well, it's fairly normal. What we really try and do is actually do some trades during the meeting, but the internet's just running so slowly this evening.
Okay.
So in between times, in between meetings, I keep an eye on things, and when I sort of say, oh, we should be doing this or we should be doing that, then I stick something on the WhatsApp board to say, look, this looks like a good idea or whatever. And also, again, probably I would also be sending out some indication of what stocks we're looking at and the research sheets on them, so that you can actually have a look at them before we actually meet, and therefore have a sensible conversation.
Yeah.
But the only one that I'm really looking at the moment now is that Vivo one, where basically all bets are off. The reason for doing it is because we are maintaining an existing position rather than seeking out a new one. But David, the best thing for you would be to have a one-on-one Zoom with me, so I can talk you through what we do and how we do it.
Yeah. Okay. Yeah. That would be nice. I mean, I sent you a connection request, Jeff. If that's you.
Yeah, sure thing. Okay. And then so basically,
On there as now.
anytime next week is usually good, and then I can take you through it step by step and show you exactly what we're doing. And we'll put that on WhatsApp. If anybody else wants to come and join us, either as a reminder or because they haven't done that before, then that's fine too.
Okay.
Yeah, I think that would be useful. Yeah.
Yeah. Right. Okay. I'll go and do the Vivo trades and get that done. Then I'll stick a note on WhatsApp to say what I've done with it, and then I'll have the recording of this, which I'll edit out the spaces, the laughing and the comments, etc. And that should be with you in the morning.
Okay.
All right. Have a great evening, everyone. Thanks very much.
Thank you, Jeff.
Bye.
Bye.
Thanks, Jeff. Cheers. Bye.